Hey everyone, tired of the market's roller coaster? One day you are winning big, the next, boom, a crash wipes it out. But what if your portfolio could survive anything? Meet the Cockroach Portfolio, inspired by the toughest creature on the earth. Do you know, a cockroach can live a week without its head, hold its breath for 40 minutes, and even survive a month without food? Pretty wild, right? That same idea inspired the Cockroach Portfolio, an investing strategy built to survive anything the market throws at you. Most people invest for growth, mostly stocks, maybe some bonds. That works when the economy is booming, but when things go bad, the portfolio crashes hard. What we need is a portfolio built to survive anything. The Cockroach Portfolio, made famous by Dylan Grice, is not about picking industries. It's about preparing for every kind of economic weather. No matter what's happening in the world, something in your portfolio should always be working. The strategy is super simple. Split your money 25% each into four assets, each one built to handle a different kind of economic situation. The growth quadrant, that's your offense. It's 25% in stocks that shines when the economy is growing and holds steady when time gets tough. Think consumer staples like food, toothpaste, soap, and utilities like power and water. People always need them no matter what the economic situation is. Inflation quadrant with 25% gold or commodities is your protection. When prices are rising and your currency is buying less during inflation, gold holds its value. You can invest in physical gold, mining stock, or ETC funds as an example. Recession quadrant with 25% cash or short term treasury bills is your liquidity and ultimate safety. When the old system is collapsing, cash is king for weathering the storm. You can have cash or invest in money market funds as an example. Finally, the deflation quadrant. 25% long term government bonds perform great during the period of falling prices in a deflationary environment. You can invest in corporate bonds like high yield or investment grade bonds as an example. Why does it work? It's all about the magic of uncorrelation. These four assets don't move together. When stocks crash, bonds or gold often rise. The winners balance out the losers, keeping your portfolio steady. You're not chasing huge returns. Instead, your portfolio is built for survival. What's the secret sauce? Rebalancing. Once a year, just reset everything back to 25%. Did your gold soar? Sell a little and buy the cheap, depressed stocks. Did the stocks crash? Sell some of your stable bonds to buy cheap stocks. This rebalancing forces you to follow the most important rule of investing: buy low and sell high. Key takeaways: the Cockroach Portfolio is not for those chasing the next 10 bagger. It's for the investor who values sleep at night stability and wants to compound wealth reliably for decades without having to predict the next crisis. It's an investment strategy built for the very long game. With diversification and rebalancing, it's the portfolio that survives the apocalypse. My aim is to share what I learned, and I try to break down complex financial concepts into easy to understand doodles. If you found this video helpful, don't forget to like, share, and subscribe for more financial insights. And if you have any questions or topics you'd like me to cover, drop them in the comments below. Thanks for watching and happy investing.